I'm not even going to lie to you guys, chat, but I just ate the fattest steak ever in my whole life, and that was really delicious, and now I'm really tired. I need a nap. But I just want to show you my 2025 calendar just to give you perspective on your life as well. This is the whole year. You have about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 fresh months. It literally only takes a person, I would say, 6 months, 2 quarters, to basically accomplish whatever you want in the world. If you want to close your first wholesale deal, it only takes 6 months. If you want to become a profitable trader, it will only take 6 months. If you want to start your own business and blow it up, it will only take about 6 months. But yeah, these red marks is when I'm doing monk mode. I basically stop smoking weed, stop drinking, and yeah, I basically stop all my vices. And of course, we're not perfect. We do fall off the wagon here and there. But this is your month. You basically have 6 fresh months to basically do whatever you want. And I'm telling you guys, just getting a big calendar helped me, but you don't necessarily need to get this big calendar. But yeah, guys, you literally have 6 months to basically work on yourself. Plus, you got the rest of the year. And just don't wait till you're in December, till the New Year's, to basically look back and regret everything that you could have done. Like, guys, it starts now. It starts today. Even if it's July, it starts today. But yeah, guys, take action, change your life. You guys got this. But let's go to the trading recap of today. But yeah, whatever you guys want to do, I would highly suggest you guys to just do it. Just do it today. Who cares if people make fun of you? Who cares? Like, you only live once. Life is too short. If you want to do content, do content. If you want to start a business, start a business. Like, you are literally the only person holding you back. And trust me, it only takes about 3 or 6 months, and you'll be really grateful that you basically took action long time ago. But enough of the yapping. Let's get back to my recap. As you can see from today's P&L, we basically hit another average day. We're basically up $17.69 today with 6 trades. And honestly, today, even though I'm up today, I don't feel happy about my performance today because it could have been 100% better. Honestly, today I could have honestly gotten off this hole, and I just didn't pull the trigger because I had a lot of fear that I was going to basically get back a lot of gains, or basically just pull my drawdown even more than what it already is. And I didn't pull the trigger in the A plus setups that I basically seen, and that I know that I was going to basically make a lot of money. But it is what it is. For some reason, that's why I made $17 today, because only he knows, the person on top, he knows why. And for some reason, I could just say that I don't really deserve to make that much money that I was going to make today. But you know what? It is what it is. We can't really dread on what we could have made. We just gotta be grateful on what we already made. But yeah, guys, it is what it is. I'm not going to cry about it. I'm gonna take my $17 win today, and I'm gonna be just grateful for today's base hit. But as I'm telling you guys, what was the plan for this month? The plan for this month is just to get off this hole, to basically make back the $253 that I've lost, just to make it back by taking those small base hits, taking my 5%, 10% winners, and not going overboard and trying to get the whole home run. We don't want the whole bone. We just want the meat of the bone. But yeah, that's the plan for the rest of the month. And let's go over my trades real quick. So today we had 6 trades. Today I seen a lot of $1 breakouts, which are, to me, that's my A plus setup. I basically seen SGBX go from like $1 to like $1.90, and I could have entered at $1.03, but I just missed it because I'm telling you guys, that fear Fear is the number one emotion that will hold you back in trading. And well, yeah, you gotta take care of that fear. And how do you take care of that fear? By basically building your track record, basically proving to yourself that you could consistently make money from the markets. That's how you get rid of the fear. But as you can see today, I wasn't really confident to take on a lot of risk because I want to play it safe. I want to play it conservative, and there's nothing wrong with that. But yeah, ONC, I took this trade at 614, and I see news. ONC, it had news about, it was a biotech. It had news about that they came out with a pancreatic cancer solution or something. And the pattern that I've seen this week and last week, that every biotech company that basically has a headline with just cancer in it, they basically just tend to shoot up. They just basically tend to shoot up a lot. So I did not chase the initial spike. I just let the price do what it's going to do. So as you can see, it had news at 6. It came all the way up and then basically came back down. It tested the $1 level where I have my red zone. It tested the $1 level, and once I basically seen it come down, wick down, I basically entered at 0.98, and then I basically rode it all the way to $1.11. So I was risking 2 cents to make 10 cents. So it was a really good trade right here. My target was to sell at this wick at this candle where it closed. So it was perfectly executed. I did really good on this first trade. So yeah, that one was executed perfectly. I really don't gotta improve nothing on that, but I really do not have to improve nothing on that. And then the next trade, BMAR. This was at market open, 846. So I basically did bad on this trade because one, BMAR, it did not follow my stock criteria. And basically for me to take a trade on a stock, it basically needs to have breaking news on the day. It needs to have a reason why it's moving. 2, it needs to have a low flow. It needs to have a low supply of shares. And 3, it has to have an abnormal amount of volume. It has to have a lot of buyers, a lot of buying pressure. So when something has a low supply and basically the buying pressure, it has high demand, what is the price going to do? Price is just going to shoot up. But yeah, that's my stock criteria. And well, this did not follow my stock criteria. I honestly just chased this one. But yeah, even though I didn't react to the first breakout, I seen it pull back, and I was like, okay, this is the second time it's going to try and break out from the pre-market highs. So I was like, you know what, I'm gonna enter right here in hopes that we just shoot up and pass $2.50. But obviously it didn't do that. And I had my stop loss below the last candle. So even though I got stopped out at like less than 5%, it was a good loss. But what could I improve in this trade? 1, strictly stick to my stock criteria. 1, I'm telling you, low flow, news on the day, and abnormal volume. Once again, this trade seems like I chased, even though I waited for that second breakout. We just gotta buy the lows, because that's where we make money, buying low and selling high. We could also make money by buying higher and selling higher, but honestly, that's way more risky for me. So I'd rather buy low and sell high. I'd rather anticipate. That's where I basically make the most money. So next trade, SGBX. And this trade, honestly, I just had FOMO on this trade because I'm telling you, I seen it come up like right here. It had news on the day, and then it basically came back down and retested the $1 level. And I was basically looking at it right here. I went to enter with 1,000 shares, but I was just too scared. I was even too scared to enter with 100 shares for some reason. But yeah, I just missed it, and then it came all the way up. It broke its all-time highs and then just shot all the way up to 193. And all pre-market session, I was really just disappointed at myself because I could have made money, but like I'm telling you guys, we are not gonna dread on what we could have done. So yeah, then market opens and it just had a nasty sell-off. And I was looking for that dip buy. I was looking for that dip buy so it could just basically just keep on pumping up. But as I'm telling you guys, a stock has the front side and the back side, especially for small caps. And right here, I was obviously, if you could see on the 30-minute, I was trading the back side of things. So I bought the dip. I thought I had support right here, but honestly, it really didn't have no support because $1.40, that's not really a support for me. I want those whole numbers, $1.50 or $1. So even though I cut my loss good, I had my stop loss before right below 140, like 138. Even though I got stopped out good, but where I messed up on this trade was that I entered 100 shares for no reason. Like there was no reason for me to enter 100 shares, especially since I set out that rule for me that I'm gonna only enter 50 shares. I'm only risk $50. But it is what it is. I ended up losing about like 7% on that. Ended up losing $10. And with that trade, it basically brought me to the negative on the day. But what can I improve in that one? If you are buying the dip, make sure there's a clear support, such as the 45 EMA, the green moving average, or a key support. And as you can see, SGBX didn't have no clear support right here, not even a key level. And two, no, and I repeat, no reason for me to enter those 100 shares. No reason for me to over leverage, especially when I don't have strong conviction in something. So that was totally my fault. And next trade, SEX. This one, it was an okay trade. This one was just moving up like crazy. As you could see, you could tell the pattern that was happening this morning. There was a lot of $1 breaks. And I know when I see a lot of stocks in the scanner basically being close to the $1, I know that we are going to get some crazy moves. And sometimes they are fake outs, but sometimes they just go parabolic with these $1 breaks. So yeah, I basically seen it break above the $1 and close above it, and I bought this candle right here in the middle, the retest, and I entered 200 shares, and that's another mistake that I did. But I entered 200 shares at 101 with a size of 200, and then it basically shot up. It made me 5%, but I just did not sold because I was being too greedy. I was like, okay, you know what? I'm gonna just hold. And I did not have no target at all. So I was just holding and hoping that I was going to get like a parabolic move. But as you can see, it basically came back down and it had this real bad choppiness. It had a lot of bad choppiness. And the reason why these candles are like this, it was because I was looking at the level 2 data and there was a lot of sellers stacked, just selling and selling and selling and selling. They're basically right here on top of like 106 and like 105, just selling on everybody that was basically buying. And says, I think this one, let me see. This one did have a big flow. It had a flow of 158 million shares. And that's the reason why the buying pressure wasn't that strong. That's why I want to only trade stocks that have a low flow, because if it has a big flow and there's a lot of sellers with a lot of shares, the buying pressure is going to have to be really abnormal, more than usual. And honestly, the buying pressure wasn't just there. That's why we basically failed to break past 105, and basically that's why we failed to buy all those shares from everybody that was selling. So right here, I was holding through all this choppiness. I was like, okay, maybe we might just get a squeeze and squeeze all of these sellers. But once it started chopping out a lot, and I was up like 3 or 4%, I was like, you know what? I'm gonna just cut my loss because there's way too many sellers stacked on the level 2 data. And as soon as I sold, I seen it come all the way. I seen it sell off. So I was like, you know what? That was a good decision. But what can we improve from that trade? Since I love the $1 breaks, I entered 200 shares, but still that is not a valid reason to over leverage. It could have been a nasty loss since I didn't follow my criteria. And two, do not enter trades back to back, especially after a loss. And honestly, that's why I justified the 200 shares, because I lost $10 and I just wanted to make that back desperately. And then my last trade with BKYI. The reason I entered BKYI was because I seen a lot of buzz. I seen a lot of people talking about it on X, and I noticed it topping out at 240. So I seen a lot of people talking about BKYI. It had news on the day, and it basically broke above $2. I seen it top out at 240 and then came back down to retest the $2 zone. And then right here, I basically seen it support itself from the 45 EMA very nicely, and then it had a strong support because it was near the $2. So I was like, you know what, this seems, I would pretty much be mad at myself if I did not take a stab at this. So I entered 100 shares. I got filled at 205, and then I just hold, and then I seen this little good spike up, and you know what, I was like, okay, I have a perfect entry, so I'm gonna just hold. It's either gonna hit my stop loss or it's gonna hit my target. And where did I have my target? My target was previous highs, which was 240. And then my plan is to just buy when it comes low and then sell back to previous highs, or just partially sell and then just have a little bit more shares for it to just run, just in case it does break past its previous highs and just starts making newer highs and newer lows. But honestly, I sold. I like emotionally sold. I got filled at 231. I emotionally sold because as soon as I seen this big buying pressure, this big green candle, I was like, you know what? I'm down on the day. I'm already up, so I'm gonna take this base hit. So I basically sold for like 12%. I made $26 on that, and I hold for 6 minutes, and it was a very nice trade. But once again, it could always be better because I should have sold partial my position. I should have sold about 75% and then just let the rest. I should have hold the rest just in case it makes a bigger move, which it did. It basically went back to like 368. That's like $1 and plus a little bit more. But you know what? We're not gonna dread. It is what it is. And as you can see, it made a newer high. Higher low, and then higher high, higher low, higher high. And yeah, that was my last trade on the day, BKYI. And what can I improve on that trade? Well, basically perfect entry, but I sold emotionally, locking in profits to recover $5, $8. Should have been more patient and held with strong buying pressure, left money on the table. And honestly, I was trading off my phone. I was like, you know what? I'm going to enter this last trade and I'm going to just go and basically do some other stuff. So I was just looking at it through my phone and I was like, you know what? We spiked up. Let me go on my other app and let me sell my position. And that's what I did. But I should have been locked in. But it is what it is, you know. I'm not going to complain. Today, it was a perfect base hit day. I still got Thursday and Friday to basically trade more. And I'm going to come in tomorrow and Friday with a more conservative mindset. I'm gonna be way more conservative in what I trade. I'm gonna try and only do fewer trades as I'm doing. I feel like I'm doing good because I minimize my trades drastically. I usually take like 10 plus, 20 plus trades, and that's really bad. I should only focus on the 8 plus setups. But that's a recap for today. We basically managed to turn a $80 loss that we lost on Monday. So far, we turned it to $48 now, which is very manageable. And we still down $250 on the month. And as I'm telling you, we're just going to keep on hitting these base hits. We're just going to keep on locking in profits at 5-10%. And that's it. So we could basically get out of this hole that we basically built ourselves. And I'm telling you guys, that's the name of the game. Prove to yourself that you could be consistent. Prove to yourself that you could manage your losses. And then sooner or later, you could like risk more when the market shows you way better opportunities. But that's it for today, guys. Thank you so much for watching. And I'm telling you guys once again, I'm really grateful for everybody who's watching. Even if I get 1 or 5 views, like I appreciate you guys so much. It really means a lot to me. It brightens up my day when I see you guys just comment, engage with my videos, ask for like advice or like Like today, I had a phone call from a guy, and he wanted to interview me for his channel. And honestly, I felt really honored because even though I'm a newbie, but it's that real recognize real, and I'm like really in the trenches every single day. I'm learning new things about myself, and that's how I should be as a trader. You never stop learning as a new trader, because even the professional traders, they got to learn about themselves every day. And that's just how the nature is about the trading world. It's basically a never ending learning cycle. And but yeah, guys, if you enjoy these videos, please comment down below, engage with my videos. Please hit that subscribe button. Please hit the like button. It will help the YouTube algorithm just push my video out to more people. And well, yeah, guys, enough yapping about me. This was my recap for today. It's Wednesday, January 15. And well, thank you guys so much for watching. Established Wisdom out.